2015. We've done several conferences, we call them Perfect Storm, a few years ago. We work very close together, and I think this is probably also, we have seen so many changes in the last 10 years, how the United States has reacted, laws have changed, their policy has changed. Stuart is actually, you're going to have the privilege of hearing him twice. This talk is going to be about economic nexus, and I was just looking, I just got an email alert, how SALT, state and local taxes, are going to be affected by the Trump tax reform. In other words, that even that will affect some of the things, but particularly one of the issues that Stuart is going to bring to your attention is the issue about economic nexus. Again, the way of, as Jackie said, how we were doing business and thinking that, okay, if you don't have any presence in the state, you don't have exposure to state and local tax. Stuart is going to shake things up, I think, here, and I'm very privileged to invite him to participate. Thank you, Stuart.
I suppose the good news is that you're clapping up front as opposed to at the end, but I hope you will also follow along. You know, it's very interesting that Jackie had indicated that BEPS is here to stay. I suppose from a U.S. perspective, typically in the United States, a three-letter word does not necessarily have a positive connotation. Tax, IRS. So now the good news is now we've migrated to a four-letter word or acronym that may not have a good connotation. But be that as it may, it's indeed a pleasure to be here. As the Gemara says, I want to thank Philip and his staff, in particular Julie, Z, Batya, and if I left anybody out, I do apologize. And of course, the rest of the staff for giving me the opportunity to come. And Jackie, thank you for co-sponsoring it. It's really a very big privilege. Oftentimes people come from America, and it's solely for religious enhancement purposes. I have the pleasure, at least, of doing more than just that, but also spending time with you and sharing with you some thoughts. Let me set the stage with respect to this whole topic of state nexus and the confusions that oftentimes come about. In particular, there were three different professionals that happened to be sitting on a park bench. There was a high-tech executive, there was a physician, and there was also an IRS agent. And they were focusing in on what was the original profession that was created by the God. And lo and behold, the high-tech executive said, well, please understand, gentlemen, that there was this whole mass of chaos. And what ended up happening is that they needed somebody to build a mainframe and somebody to come up with the software in order to facilitate all of this great world that has come about. And so no doubt the first professional must have been an executive that had high-tech experience, let alone the software engineering. And the physician said, oh, I understand, my dear colleague, I hear what you're saying, but at the same time, remember the most creative and the most phenomenal what do you call it, surgical assistant that occurred, because by virtue of an incredible miracle that Eve was created, no doubt there had to have been a surgeon or a physician attending. And then, of course, the IRS person said, I understand both sides, gentlemen, but remember one thing, who do you think created the chaos to begin with? And ladies and gentlemen, that's really the stage for today, because it really is a bit confusing. Understand that from Israeli tax purposes, you have a relatively straightforward system, if I can say that. In other words, you have Israeli tax and you have VAT. Not that doesn't mean that there's not levels of complexity, but in the United States, what ends up happening is that we have a few different levels. We have first the federal, then we have the state, we also have the local. Now, so that means, and by the way, it's not just on the income tax side, it's also on the sales and use tax as well. So the question really becomes, what makes a company subject to a different state's tax laws? Now you're going to say to yourself, wait a second over here. I'm only going to open up a company, for example, in Delaware. Why should I care about anybody else's state? And maybe the state tax laws are much more favorable in Delaware, let alone the corporate laws, because everybody seems to be migrating there. But lo and behold, there's such a thing called Nexus. Now again, Nexus has 5 letters, not 3 letters, not 4 letters, but 5 letters. What does Nexus mean? Nexus means revealed. You have some connection to something that's going on. Now the question is that how do you define it? Now the general rule is it's in the eyes of the beholder. But the problem is that this started out at a federal law. And what ended up happening is, but before we get into that, let's make sure we understand. If we don't do the taxes right, your effective tax rate may be well in excess of 50%. Of course, you've got the different jurisdictions fighting about the same taxes, let alone the aggressiveness. Now, I understand that Mas Haknasal may be a little bit aggressive, at least from the Israeli tax perspective. But, I'm sorry? But you can't imagine what happens when you get the local folks. Now you have to understand when you're dealing with local tax revenue people, and I was just telling one of my colleagues before the program, I said, you've never seen me before down south. I put on a southern drawl, I put on my cowboy boots, and lo and behold, a cowboy hat, because you've got to look the part to be able to do that. So you've got to make sure you know exactly what that is, especially when you're down in Louisiana, where you got to be the old boy situation. But also, and most importantly, in today's world, it's very easy for a foreign company to do business in the United States because you've got increased technology. So what do we have over here? Okay. I went too fast. Not going back. Okay. Okay. There's a federal law that basically says that it prohibits a state from imposing an income tax where the taxpayer's only business in the state is something called solicitation of sales. Now, what in the world does solicitation of sales mean? So the answer is that you've got to go one step further. This is literally by taking like what Katuv Torah, and now what happens is that then we're going to go to the Mishnah, and then from there we're going to go into the Gemara, and then Lamata Lamata. So what happens is we have something called a constitution. Our Constitution has a provision. It's called the Due Process Clause. And the Due Process Clause provides you have to have some minimal connection to that state. Now we're back to this problem. What does nexus minimal connection mean? So there was an application by the Supreme Court in 1977 that interpreted the Commerce Clause, which is the portion of the Constitution that deals with conducting business across the United States. And now, all of a sudden, it says you have to have substantial nexus. What does that word mean, substantial? And not only that is, but it has to be fairly apportioned. Not only that is, you can't discriminate against interstate commerce. We want companies to do business in between different states. But it also has to be fair. Now, of course, fair is in the eyes of the beholder. So, what ends up happening is that it's all based upon a fact-sensitive analysis. Let's see what that means. So, we had some additional Supreme Court decisions. On the one hand, if the only thing that that company did was solicit through the mail does not in and of itself suffice. You have to have more. And then we have the most important decision. It's called the Quill decision from the Supreme Court in '92. What it said was as follows. By and large, just because you have a little bit of a presence in the state, you have some diskettes, that's just basically when you're having a little bit of an inventory, that wasn't enough. But instead, you actually have to have substantial presence. Well, what in the world does that mean? How much activity is it? Ladies and gentlemen, today, how many people buy products online? All I know is that one of the most frightening situations occurred when I came home, and lo and behold, I actually saw our credit card, actually one of the credit cards, talking to the computer itself. And I'm thinking to myself, this is pretty good. Next thing I know, the computer's responding. So you can only imagine what goes on. But very rarely, when you have children, thank God, and grandchildren, they're not numerous packages from that wonderful place up in heaven called Amazon. Okay? I don't know how long it takes for the shipments to come here, but if they're anywhere near the magnitude of what goes on at the Shabbos home, in the United States, I can only imagine what it's like. Also, you have a brand new concept called FBA. FBA is fulfillment by Amazon. What does that mean? Does that suffice? Okay? As you'll see shortly, you actually have some states that says, yes, there's this concept of physical presence, but we're confused. So what we're going to do is we're going to say if you're doing more than a certain amount of revenue in state, 100,000, 200,000, we're going to automatically tax you. And then, of course, the real question becomes, why should I care? My competition does not impose a state tax, and I'm going to lose out. So should I care? So what happens is that there are some very rigid rules depending on the state. Now, I use, for example, Maryland, not just because it's where we are located, but a lot of states have seemingly followed and mirrored this. Number one, you need to have some type of a physical presence. So, office space, clearly. Employee staff located, okay? Maybe the employee may be working at home. And the question is, if I only have one employee, is that enough? Do I have any independent contractors or an agent? One of the hottest issues today at both the federal and the state level is when I have workers that are technically associated, notice I didn't use the word employed, with the company. Are those people properly characterized as independent contractors, or are they employees? And there are numerous IRS audits going on as well as at the state level. And part of this relates to the fact, are they working for me exclusively, or are they working, do I have control? In the context of this situation, it's very possible that it may not really make a difference. Because if I have people working for the company, whether they're exclusively for me or they work for others, the fact is that doesn't mean that I'm not doing business in that state. Okay? Let's say, for example, I've got some technical assistants, I've got corporate personnel, installation of companies' products. In other words, I don't physically have an office in that state, but I send my people in order to assist the client. Or what happens even yet? I just go in state to solicit orders. So those may be enough to establish the nexus, and the states have become very, very aggressive. Not only that is that for purposes of the sales and use tax, basically, and this is followed in various states around the United States, you have to permanently or temporarily maintain or occupy an office to sell product to be subject to the sales and use tax. You have to have an agent or other representatives going there and doing similar taking orders. Or alternatively, you're going to enter the state on a regular basis. Now, what's very interesting, there's such a thing called sales, and there's also a thing called use tax. Technically, as if this is not complicated enough, if you buy a product from an out-of-state company, you buy a book, and what ends up happening is that company does not charge a sales tax because they don't believe as though they're subject to a sales tax. That does not mean that technically you as the purchaser is not required to pay a use tax. The tax is often the same, but the responsibility is on you. Now you're going to say, how are they going to ever catch me? I once had this discussion with the former head of the compliance division for the state of Maryland. And she's talking about this, and I looked at her, she said, well, I just bought a book, and she says, I'm in the process, because I walked into her office, she said, oh, guess what I'm doing? I'm filling out my monthly use tax return. And I said, oh, really? That's interesting. I said, what have you reporting? She said, well, I bought 10 books, and I'm paying the use tax on it. And I'm thinking to myself, what political position is she running for next? Keep this in the back of your mind just from a complexity perspective, but it's actually out there. Okay, now, the economic presence by a few states. Clearly some require the physical presence. However, as we mentioned before, there are some states that are getting away from the technicality of having a physical presence, and they're doing it on a revenue model. For example, Alabama, threshold is $250,000. If you're doing business of $250,000, you're automatically subject to state income tax. no office, no sales, all online, okay? But yet, if you're technically generating in-state more than that amount of money, you're automatically subject to state income tax. Now, South Dakota, I don't know how many of you in attendance have been in South Dakota, okay? But the threshold is 100,000. Tennessee, 500,000. Each state is different, and it's complex, and we keep constant charts, and we're on top of this stuff as it relates to these types of issues. Okay? But understand one thing, according to the Quill decision, you have to have physical presence. So there is some cases pending before the Supreme Court to ascertain whether, in fact, the revenue-based model will be sustained as opposed to actually requiring a physical presence. So this is something that's open-ended. I'm sorry, Jackie?
Online would be considered physical for that purpose? Because it was on the list for Maryland.
Right. The answer is it's possible, but right now it's unclear. But understand, the states are crying poverty. They're saying that we are losing out. Yes, the economy is doing better in the United States. Yes, unemployment is very, very low. But the problem is that the state income taxes are hurting, so they become much more aggressive. And the way they do this is by checking up on companies, knocking on doors, and doing things in a very, very aggressive way. And you cannot ignore them. They don't like to be ignored. And as you'll see shortly, it's better to go to them than to wait for them to come to you. Because oftentimes, if they come to you, it's imagine a situation where you have poked the bear that's had been sleeping, okay? It's the winter, and all of a sudden it comes out. It's a little bit upset. So those are things you have to be very cognizant and aware of. Okay. Now, as if to say that the compliance itself is not enough, understand that you have to worry about the different tax rates, and we'll go through a chart momentarily about the different states' rates. Number two is some exemptions exist, but it's state by state basis. Number three, you actually have to register. You have to get a permit and an account number to be able to do business in that state. Number four is you actually have to have and file forms on a regular basis. Now, I know Philip's office is very astute and very on top of these things. But again, these are things you have to keep in mind. And of course, you have to keep in mind the due dates. Because the states are very, very aggressive when it comes to imposing penalties. Just ask those who live in New York, where the Department of Revenue, the Department of Taxation, is constantly issuing notices. Actually, in some respect, actually more expeditiously than the IRS. Okay, 45 on the sales tax side. 45 out of 50 states have some form of statewide sales and use tax. The 5 highest combined state and local sales tax rates are Louisiana, 9.98%. Remember, ladies and gentlemen, this is totally separate and apart from the income tax. That's just on the item itself. Tennessee is a little bit less at 9.46, Arkansas 9.3, Alabama 9%, and Washington is 8.92%, which is interesting because of some major tech companies that are based out of Washington. That's Seattle is a main part of that. But there are some exemptions. So again, it's something to keep in mind. And number two is one of the most important exemptions is when a company, a manufacturer, will sell a product to somebody else for resale purposes. There are clear exemptions on resale, but the fact remains is that ultimately it's going to be paid on the second level or the third level, depending on the circumstances. But of course, the reseller has to have a reseller certificate. Those in the room that perhaps have actually had to deal with state sales and use tax, let alone state income tax audits, are not something that are insignificant. They have to be taken very, very seriously. Actually, before I boarded the plane, we had a situation where somebody actually had a summer home in a certain area and was actually there for 6 weeks out of the year. And all of a sudden, the state got wind of it. This person's regular income tax at the federal level is a few $1 million. And lo and behold, all of a sudden he gets a nexus questionnaire. And the professional did not fill it out the way I would have liked. And now he is facing a state tax bill from 2011. You would say the statute has expired, but he never filed for over $1 million. So again, not a small matter, it's something to be encountered. Now granted, that happens at the individual level, but the exact same thing can happen at the entity level. Yeah, go ahead.
Who is issuing the reseller certificate?
Everything is at the state level, okay? Yeah.
And if this reseller is doing business for me in many other states in the US,
I'm sorry? If the reseller is
providing the service
right.
outside of his own state.
Right, so you have to be very careful about each state's requirement. It's not something you can just say lo echat, but you have to figure out exactly what it requires to do business in that specific state. I'll wait after the end. We'll have some break between the next speakers. I'll be glad to entertain additional questions. Take a look at this chart. Basically, it just gives you an idea of the different states' sales tax. Okay, we already had the higher ones, so again, this is the list. And now we'll do this, by the way, corporate-wise on the next presentation when it comes to the structuring and understanding which states are the high ones, which ones perhaps you want to be more attracted to. But again, this gives you an idea of the landscape over here. And clearly, you know, for example, DC, it's 5 3/4%, Maryland. These are not small amounts. And the sales tax, when it comes to certain taxable products, can actually bite the person, coupled with the fact that when you're structuring a transaction and you're structuring things for contract purposes, you need to entertain and to make sure that that's factored in. Because what happens is that sales tax is not only the responsibility of the purchaser, but it's equally the responsibility of the seller as the collector. Also, one of the hidden aspects of sales tax, similar to at the federal level, is that this could become the personal liability of the people that are in charge of the company. Just like, for example, you have components of the employment tax for federal purposes, and oftentimes for state, where the state statute and the federal statute allows the tax authorities to pierce through the corporate veil and impose personal liability at the individual level that are responsible for the non-payment. Similarly, this can occur in the context of sales and use tax. It's something to be very, very careful and to be understood from a planning perspective. Doesn't mean that sales and use tax applies to every transaction, but you have to understand that before you go through the whole implementation of your business strategy. Okay, various state and local registrations. Again, typically you start out with the Secretary of State, you go to the state sales tax, state income tax, employment tax, local tax, city business license. You're going to say to yourself, this is worse than doing business in Israel in terms of licenses. But the answer is that, and every state has their own rules. So you need to make sure you have aligned yourself with proper advisors that are well equipped. In my office, I've got one paralegal who's a whiz, and she's just on top of all of this stuff. And you just after a while, it becomes second nature. Okay, just to understand and keep things in mind from an exemption perspective, again, focusing for a few moments on the sales tax side. You have to understand who the seller is, you have to understand who the buyer is, and you have to specifically understand, oftentimes services are exempt, okay? And you also have to understand what exactly is the purchaser. Typically, if it's for resale purposes, that would be exempt, but if this is the end user, you've got to be much more careful. Now, there are some special rules when it comes to digital products, food products, medical products, software as a service, SaaS, services and software. Now again, these are near and dear to each of the companies, and especially in the high-tech space. It's something to keep in mind. Very rarely are the exact same rules in each state. So and again, you have to understand that before you entertain going into business in those jurisdictions. Okay, so what exactly is it and what makes the most sense in terms of trying to understand what to do? Clearly, take a few steps back. Number one, identify, for example, I put 10, but whatever number of states you're going to understand where your customers reside or where you think you want your customers to be, then you have to understand what it requires to do business in those states. Number two, be proactive potentially. Ask for an advance ruling from that state revenue department. We've done this numerous times. Oftentimes we'll go in anonymously up front, like you would, for example, going into Mas Nasa or others. So you know, but you at least have to have something, and then you get some good vibes, and then you can memorialize it in a letter. There are, as we'll talk about in the next presentation, the use of wholly owned subsidiaries in state to protect and literally box in, so to speak, that activities within the state so you can do a better job to confine those sales subject to that specific state's income tax or sales tax structure. And then, of course, you have to include in customer contracts certain indemnity provisions. So if it turns out that ultimately something may be subject to a tax that you didn't anticipate, at least have it potentially with a customer or the person you're dealing with would be responsible to indemnify you because they're the ones who have been paying it up front. Now that could cause some unnecessary or conflicts with the clients, but it's something to at least be considered. So basically what you want to do is you want to proactively establish a strategic plan for providing goods and services to customers as opposed to being reactive. That's the worst thing you can do under these circumstances. And also there are some states that actually have voluntary disclosure programs so that to mitigate the adverse tax effect. Again, this is a high-level view of what goes on and the whole concept of nexus. If you're confused, welcome to the club. It's not something that's easily understandable because of the fact oftentimes each thing is done on a state-by-state basis. But when you do enough of this as part of the SALT world, it's something to contemplate, to incorporate into your tax strategy. And as you'll see from the next presentation, there are various strategies you can use that can be developed, on a very, very well-established and tax-efficient basis, notwithstanding the fact that there are rules that are constantly changing. So at this time, let me take some questions, or we can go offline and during a break, come back at what time?
15 minutes.
15-minute break. Just we'll have some questions at the end. We're going to have the panelists will get up before Gur Shomron speaks. If you ask Stuart nicely, he'll show you from his experience of him wrestling with an alligator in Mississippi based on his... but everyone's entitled to a break. But I will pose a question that I would like maybe at the end, and I think it's something that we all of us see. Israeli companies selling directly to customers in the U.S. Sales tax nexus. That's something I think that we'd like to hear more about. And everyone has a break. I think we'll resume at 22. Correct? Okay, thank you.